Welcome everyone to the Kendall Report. It is Sunday night. Just remember to subscribe and like these videos. I hope you folks enjoyed the free seminar I did yesterday. If you haven't watched that, there's a replay. We'll make sure we put a card on tonight's video. It's about the indicators that I am offering out to the public and teaching you how to use. So please take a look at that, and please join us. If you subscribe, you will get the indicators forever for a lifetime, and you'll get to spend a month with me in the live trading room, Monday, Wednesday, and Thursday. We do have a shortened week this week. We've got Friday is Good Friday, so we're closed. And I'm just going to start reminding you folks, I have a trip coming up the following week. So there will be videos Sunday through Wednesday the following week, just like this week. And then I'll be gone and we won't return until Tuesday. I'll get all you folks up to speed on that. So there's a trip coming up that I have to do, and heading for the great state of Texas. So I will see some of maybe you Texas folks out there. Anyway, so let's get into tonight's video. A fair amount to look at this week. We've got inflation. The inflation monster is on its way, and that's been a driving force. Just take a look at what's coming out. CPI on Tuesday. So tomorrow's kind of a nothing day on Monday, but there is CPI expected to show 1.1 to 1.3 month over month, and a 8.4 annual year over year. And that might even come at as a surprise, because we do have the look back on some of the crude oil prices and things that were influencing a lot of things looking back in the rearview mirror. Now we're continuing to see some softness in oil, which I'll discuss here in just a minute. But Wednesday we'll have PPI expected to show 1.3 as well, and that range is about 1.1 to 1.3, and then year over year 10.6 on producer prices. These are big numbers, and I don't expect them to go down a lot, but this is going to continue to be an issue. And the question is, what happens if there's surprises here? And what if the numbers are even bigger than everyone thinks? So I think this week has some potential for some volatility, and maybe almost everything's built in around this inflation story. Maybe not. We'll see. Like we've been talking about, the crude oil is coming down. Wholesale gas is coming down a little bit in some areas, but for the most part, it's just locked down, right? So we're still seeing a lot of the economic impacts out there from the standpoint of what's going on. The rest of the week, on Thursday, we've got retail sales coming out, expected to show 0.6. Not sure they're going to have any really big impact on anything. We also have earnings coming out, some significant earnings. We've got on Wednesday, I believe, we have JP Morgan, BlackRock, Thursday's Wells, State Street. So we have the banks coming out, inflation number, Morgan Stanley also on Thursday. So we're really looking at a lot of pretty significant numbers, at least starting to give some kind of feel for what we're looking at going forward. I still think the economy is going to really continue to struggle. We're still seeing interest rates printing up at pretty high levels. I'll cover all this stuff. Shouldn't take us long to get through tonight's video. I think after we get closer tomorrow night, I'll be able to cover a few things. But we're seeing minimal action right now. The S&P right now, futures are down 1275. They were down 6, so that's doubled since I started 6-8 minutes ago. But we don't really have any of that VIG I talk about. There is no upward VIG at all in the markets. We continue to see relative weaker pressure coming in. I'll go through all the details here in a minute. Let's go ahead and take a look at the database. I think there's some interesting things that we're going to see when we look through there. We'll start off with the daily database. We're down to 43.1%. You know the number, 42% or lower starts to indicate that we've got some further softness coming in. So we're right on the threshold there. We did see 2,075 sell signals and 179 buy signals. And let's go over to the weekly, because I really have been hoping that we would see some relative strength start to come in on the intermediates. No such luck. Net on the optimized, there was only minus 111. There was no traction at all. 260 buy signals versus 273 sell signals. Absolutely no traction, nothing there at all to look at, and that's a big problem for me. I was really hoping that maybe with the stability, even though the short-term database was pulling back, that we would see some sort of stability or some traction come into the intermediate. There's just no intermediate traction, and I've got to go with the database telling me that is just a sign that there's some underlying issues with this market that are not going away. And it looks to me that we're likely to see maybe further pressure as we come in. Maybe it's this inflation story. Maybe it's some of the earnings that'll start to come out toward the end of the week. But, I think we've got some problems ahead. We just can't get the traction. I was really hoping that there'd be some optimism I'd be able to share tonight in the markets. There really isn't. So we're continuing on a lot of our institutional clients and people that are involved with us on running portfolios, including some retail folks. We really are looking at just no traction here, continuing to be in high levels of cash. There's not any real, traction on the intermediate, as I said, but on the daily, we're seeing even those portfolios pull back even on the short-term signals. So there's just nothing there at all. Let's get into the technicals and take a look at what's going on there. So as we look at the S&P, we're looking at the PPM1 is minus 0.22. If you recall, just about 8-10 days ago, the PPM1 was in the plus 80 handle. Let me just get up 92. Looked like we were starting to get some kind of traction here. Now we're trading down below the 21 period moving average. Let me bring up the market grid for tonight and on Monday. We're looking at 44.48. We've had a low of 44.65. Actually, S1 is 44.67. So we printed S1 so far. I think we're going to see further downside, potentially printing 44.48. And then all of a sudden, if we get through those numbers, we're looking at 44.14 and the potential for these Fibonacci numbers to come in play here. Let me bring those up on screen. I've talked a little bit about them. 43.50, 42.43, 41.76, which is basically setting up a retest of the 41.01 lows that we had a number of weeks ago. The only positive that's happening here is we are seeing that PPM2 is trying to turn up here, which suggests if we can stay above 44.73 on a closing basis, that will keep some optimism into the markets for at least several more days, and maybe a potential for the market to rebound. But there's some key levels above the markets, and we've seen a pattern that's set up here. And let me bring up the weekly chart on the futures so I can discuss this. But we saw when we got above the 46 handle a couple of weeks ago, we just kept getting rejections out of that 46.20. And now we've traded all the way back into the 44 handle. We're seeing the same thing where we're having issues. The market keeps getting rejected around the key pivot number is 45.38. We have to get above that to get this market to start to stabilize. If we stay below that, then we're probably going to continue down to these Fibonacci sequence that I just discussed. Next market I'll discuss is the NASDAQ. NASDAQ's down 77, down 0.5% right now. The 10-period moving average, 14,214, the low 14,253. We look at S1, 14,157. That's probably a minimum. I think we're going with R1, S2 on all of these indexes as we come in to today. I think there'll be some protection taken. But if we just look at the general position of this is the weekly NASDAQ that I'm looking at here. So that's the 10-week moving average. The general position on the intermediate is that we are still in this downtrend and it wants to accelerate down to the downside. So let's go to the daily NASDAQ and you'll see somewhat of a similar picture. The PPM1 is at a minus 0.49, so we're in a downtrend there. So that puts a cap on the market, 14,765. That number is dropping about 100 points per session. So that's going to be 14.5 in a couple of days. And if we can trade and close below 14,218, which is the 40-day moving average, then the next levels that we're going to start to look at will be down toward those lower end of the range. I'm going to go back to the weekly chart. It's going to print us down to a possibility of an S2 that's right at 14,000 level, 14,967 and 13,778. Looks to me that we're going to see this weekly pattern start to take some precedence as far as being the primary driver of the markets. And the possibilities are, let me just bring up something real quick here, that we could just be seeing a retracement of this run here. Let me bring up some rough numbers here. We're looking at the 0.618 would put us right into the numbers I just talked about as far as a retracement here, somewhere between 13,953 down to 13,786. We take out those numbers and we're looking at an acceleration to the downside, probably ultimately moving towards the lows that we printed about 5 weeks ago, which are down at 12,942. So there's definitely some downward pressure. The PPMs are in, PPM2 is in downtrend mode, and that suggests that there is a cap on the market right at 14,921. So any move up to that level is going to be an opportunity to get short on the NASDAQ. It doesn't look like we're going to get there. Like I said, it's going to the probably an R1 possibility for this week, S2, which would put us down at those support levels I just discussed. We'll start with the Russell Weekly. Russell finished the week, this is the cash, 1993 is the STX for last week. This week we're coming in, STX is 1908. So there's quite a bit of downside potential, 1974, 1951 on the downside. We finished at 1994, so there's still some downside. The only thing I can emphasize here is that we're seeing PPM 2 and 3 accelerating down, which tells us that this trend is going down. I thought we might have a weekly bottom here based on this cycle, but it looks more like it's a topping cycle, especially since the way we closed last week. This is a pretty negative configuration here. So due to basically the views of what's going on with our database, no traction, all of that stuff, that we're not getting sorry, I forgot to turn my phone off. We're not getting any of the elements that are going to even moderately suggest we're going to get a low. This is actually the big story. We continue just to see, this is the weekly, we got a weekly RTX sell signal. We saw the 10-year Treasuries print all the way to 271. I went through some numbers last week. I'm talking about the potential going to 318, maybe higher from that standpoint. The PPMs are all accelerating. We're at 4.58, 3.02, and 2%, 2.0 on the upside on all of these averages. So everything is pointing to the higher numbers. I'm going to bring up the monthly chart because this is where some of these higher projections are. Right now we're looking at, if I look at the Fibonacci projections, 2.87, 3.16, that's a retest of these taper tantrum highs. We're at 3.23, so call it 3.25. This looks like where we're heading to these levels, and I won't do the math here, but this is what's on here. The Fibonacci projections that you're seeing on the screen here are suggesting that this is where we should end up. The PPMs are just off the map. You can see all four of them are just screaming here. And this is just, this is on a monthly, so secular basis. Let's come back all the way down to earth and look at the daily. It's interesting because the daily is now giving upward projections 3.13, 3.44, and 3.63. So we're looking at easily retesting the 2018 highs, and this, I mean, this is a big deal here. This doesn't look like there's any bottom in sight for the 10-year, and I suspect this may also continue to drive the Dow up. I'll probably cover the Dow in the next couple of days. I won't do it tonight, but there definitely seems to be a lot of upward pressure, and I think this has to do with the higher yields that continue to drive the markets. But you can see we're finally starting to stall a little bit on momentum on the daily, so maybe we'll support here, but now around 2.64 is going to be support. Below that, there's more support down around 2.5. So regardless of what goes on here, it looks like we'll continue to see this upward slope and least stability, and a move toward 3% looks very likely. Okay, well, next market is crude oil. I've got the daily crude. I've been talking about this pattern for a while. We have some downward projections way down at 77. Let me get the exact number here. 79.67 is the minimum, which is also around the 200-day moving average. The only thing I would say is this is a very similar pattern that we saw before. We get these, what I call them, bubble patterns, and there's usually a bubble here. This suggests to me that the crude oil is very close to bottoming. We're going to need to get a close back above the, right now, the 10-period moving average, which is right now 100.34. I think the markets will try to rebound back to there. We're pretty close to a low. Let's go to a weekly pattern here. S1 for the week is 95.02. We've had a 95.91 so far. Look for that to be the bottom. R1 101.50, R2 105.11. I think we're going to see the markets try to rebound back above the 10-period moving average, which right now is at 100.20. So look for some stability here and the possibility of moving up. I don't think that 79 handle is going to be a good number, but we are seeing quite a bit of change in the momentum on crude oil. So maybe the 6 months of selling of strategic reserves will work from a sentiment standpoint, and maybe the discounts that we're seeing through some nations selling oil to India and other folks is possibly keeping pressure on the markets as well, because I think the world market is not flooded right now, but there's plenty of aggressive sellers out there. Let's just put it that way. Next market I'll cover is gold. Gold continues, this is the weekly chart here, that gold continues to hover right above that 10-period moving average. I've been talking about that with you for a number of weeks now, and we're just seeing that rising 10 pattern through the market grid, which is always a positive pattern. We're still at a rate of change on the PPMs are at 0.70, 0.22, 0.16. So this is literally holding this line right here, 1931. So that's all we need to stay above. So far we've been 45 to 54 on the high low. This is the weekly chart. Just going to the daily, we're seeing us stay over the moving averages. The PPMs are trying to turn back up. So we're going to need to maintain this values up here above 1939. It's interesting that we've been so flat that the 21 period moving average 1939, the 40 1939.1, and the 10 1934.90, and it's trying to turn up right now. So we've got a very flat pattern, very neutral pattern. I think the weekly still suggests that we're going to move just a bit higher in the pattern and probably get up to some of these Fibonacci projections up here, which are currently suggesting that we could get up to around 1965 or so. I don't see much above that at this time. Final market I'll cover is Bitcoin. Bitcoin continued to drift over the weekend. We're down to the 40-period moving average right now, 42,062. The low is 41,893, 42,180 last trade. So we're right there. PPMs have all faded off. They're starting to become a little bit of risk on the downside again. Let's go over to the weekly. Weekly is trading just about at the STX number, 41,021, the low 41,823. So we're right there. This chart will update in a couple hours. My expectation is we'll see the market grid turn down, and the key level is, I've talked about this number, 41.4, we'll call it 400. We'll just round that off. We've got to stay above that. If we get a close below that, which we're very close to doing, then we're going to see a rollover here and possibility of coming back down to test the 30, we're going to call it a 38 handle, something like that. So the risk is starting to come back into Bitcoin, and that actually is not that's surprising, because this has become really a risk-on, risk-off type asset. And if indeed we're going to see some potential downside on the equity markets, then it looks like Bitcoin will probably follow. Well, folks, that's going to do the video for tonight. Thank you so much. Remember the schedule. This is a short week, so final video will be Wednesday night. Next week, I I have a trip coming at the end of the week. So we'll do Sunday to Wednesday next night, and then I'll start back on Tuesday night. And also the live room will be closed on Monday. I'm actually traveling that day. So I'll be back on Tuesday, and we'll get back full on and move forward with all the market action that we can handle. So hopefully this week we'll be able to establish some really interesting patterns on what's going to be unfolding as we come into April. And maybe we may be starting a maybe 8-12 week decline, and I will update the longer term viewpoint of the markets as we come into probably next week sometime. Okay, have a great evening, have a good day trading. We'll see those of you in the live room tomorrow at 1 o'clock. I look forward to spending some time with you. Don't forget to subscribe and like these videos. Also, put this screen up here. This is the link to get to the indicators. Sign up and join us in the live room tomorrow. We're doing a lot of education and using these to trade off of. The Fibonacci projection tool is just magic when it comes to day trading. So make sure you watch the video that I did on Saturday and come in and join us. We're getting a lot of really good comments and people making some money with these indicators. So thanks again for watching. We'll talk to you tomorrow night.